Ever wondered how you can lighten your tax load under Section 80C of the Income Tax Act, 1961? Well, Section 80C is a provision in the Indian Income Tax Act that serves a very interesting purpose. It allows taxpayers like you and me to reduce our taxable income. And how do we do that? By investing in certain savings instruments? Yes, it's as simple as that. So, if you're a taxpayer, listen up. This might just be the information you need to save on your next tax payment. Now, you might be asking, who can take advantage of this provision? Well, the eligibility to claim deductions under Section 80C is quite inclusive. It's open to all Indian residents. That's right, if you're living and earning in India, you're eligible. But it doesn't stop there. This provision also extends to a unique entity called a Hindu undivided family, or HUF. And HUF is a specific type of family arrangement recognized by Indian law, and it too can claim these deductions. Here's the kicker. There's no income level requirement to be eligible. Whether you're a high earner, middle income, or just starting out, Section 80C deductions are open to you. So the bottom line is this: your income level doesn't matter, your type of earning doesn't matter, and your family arrangement doesn't matter. So as long as you're an Indian resident, individual or HUF, you're in luck. Section 80C deductions are available to you. Now let's dive into the details. What investments and expenses can you deduct under Section 80C? Section 80C of the Income Tax Act, 1961, is a versatile tool that allows you to claim deductions on a broad spectrum of investments and expenditures. Let's explore some of these avenues. Firstly, life insurance premiums. Whether it's a policy for you, your spouse, or your children, premium payments are eligible for deductions. This way, you're not only securing the future of your loved ones, but also saving on taxes. Secondly, contributions to Provident Funds. Whether it's the public Provident Fund or an employee Provident Fund, contributions made during the year can be deducted from your taxable income. It's like hitting two birds with one stone. You're saving for your retirement and reducing your tax liability. Thirdly, tuition fees. Yes, you heard it right. The tuition fees paid for the education of your children can also be claimed under Section 80C. It's a win-win situation. You're investing in your child's future and at the same time saving on taxes. Last but not least, the principal repayment of home loans. If you're repaying a home loan, the amount repaid towards the principal can also be claimed as a deduction. This helps to lighten the financial burden of owning a home. Remember, these are just a few examples. There are many ways to make the most of Section 80C deductions. Before you get too excited, there are some limitations to be aware of. Yes, Section 80C of the Income Tax Act can be a real game changer for your tax savings. But it's not without its constraints. The first thing to note is the ceiling on how much you can deduct. Regardless of how much you invest or spend, the maximum limit of deductions under Section 80C is currently pegged at 1.5 lakh rupees per annum. That's right, even if you invest 2 lakh rupees in eligible schemes. The maximum you can knock off your taxable income is 1.5 lakh rupees. Additionally, these deductions are only applicable to the individual who has made the investment or incurred the expense. So, you can't claim deductions for investments made in the name of your spouse or children. While Section 80C can help you save on taxes, it's important to remember that there are limits to how much you can deduct. So, to wrap things up, Section 80C of the Income Tax Act, 1961, serves as a beneficial tool for reducing your taxable income. It's open to all taxpayers, allowing you to claim deductions on certain investments and expenses. From life insurance premiums to tuition fees for your children, a broad spectrum of expenditures can help you lighten your tax burden. But remember, there's a ceiling to these deductions. As of now, the maximum deduction you can claim under this section is 1.5 lakh rupees per annum. So, while it's a handy tool, it's not an all-encompassing solution to tax planning. It's crucial to diversify your investments and savings strategies beyond Section 80C to optimize your financial health. Remember, tax planning is an important part of your financial health. By understanding and utilizing provisions like Section 80C, you can save money and invest in your future.